I'm waiting for you. Use the comment section. Let me know where you are watching me from. All right. I'm waiting. I can see that a lot of persons are here already. So I'm waiting for you guys. Okay. Let me know where you're watching me from. It's very important. All right. Let me know where you're watching me from. Okay. Where are you watching me from? Yeah, okay, I can see Obim from Calabar, Ifeoma from Lagos, Zifolo from South Africa, Brabra from South Africa, Izzy from Anambra. Also, someone said watching you from YouTube. Also, Blessed Legacy from Abuja. Okay, cool. Yeah, Julius from Nairobi. Awesome. Feels great to have everyone here this very day. All right. So today we'll be taking a live trades. Starting with the Euro USD. All right. Now this is just more like a continuation from our conversation in the last live session. Okay, because when you look at the chart, you would already observe that there were already pre-existing lines drawn on it. All right. However, as our custom is, I've always told us that whenever you open a chart, okay, the first thing you want to do is to start from the top to bottom. The next thing is to look at what the market structure currently says. All right, where the support and resistance is at present. So that is what we are going to do now. We go to the monthly chart. Good. As you can see on the monthly chart, yeah, we draw out our, let me clean up all this chart so that we can have a clear chart to work with. Now, so we start with the monthly chart. The first question is, what is the current market structure? What is the current market structure? So the current market structure, as we can see, is obviously a downtrend. All right, obviously a downtrend. The current market structure is a downtrend. Okay, it's a downtrend. As we can see, it's a downtrend. That is the current market structure. So now let's map out levels of support and resistance, because these levels are very important, for us to observe. When we observe this level, it now helps us to understand where price might most likely get to. All right, either upside or to the downside. Now let's draw out support and resistance. We start from here. Okay, these are resistance levels. These are resistance levels. These are resistance levels. All right, these are resistance levels. Now, so we can see that we have been able to map out areas of support and resistance. So we saw that price got to this place and found it difficult to break out of it, and price fell, came down later to this place, created the resistance, pressured price downward, and price went down. price went up again to that same level, close to that same level, and was pressured down. All right, and price went up, but not above the previous high that it had created. All right, and was pressured down. Okay, and we can see what happens here. So look at this level here. Price came here. Let me insert some objects there so you could see what I'm saying. Good. Yeah, I'm coming. Okay, price came here. Good. Price came here, okay, went up, came down again to this same level, went back up, all right, came down again to this same level, went back up. Now, if you've been following my sessions, I've always said something very important, that the more price touches a support or resistance level, the weaker the level. All right, so you see price comes to touch this here. The second time price came to touch this here, this is now weaker. Is weaker than the previous support level. Then the third one is weaker than the second one. The second one is weaker than the first one, and the third one is weaker than, it's like the weakest out of the three. So which means there are great chances that if price comes down to this same level again, after these three consistent price footprint, there is a likelihood of a breakout, and you can see what happens here. All right, and price finally broke out. So when price finally broke out, price went down, and there was a little rally. All right, and later it came up again to test that previous support turned resistance level, because after it broke out now, right, it now turns resistance level here. It was previously support at this place. All right, let me get I need you guys to be able to catch what I'm saying clearly. Now, this level was a support level. All right, but now it has now turned resistance level. All right, so this support level here has turned to resistance level here. Okay, because price broke out from this support level. All right, and price is finding it difficult to break through this level again, and that is why there's resistance. Price is being resisted at this level. That's why we call it the resistance level. Now we can see price at this current level, all right, from the higher time frame, which is the monthly time frame. So for a clearer view, we take it deeper and say, okay, let's go deeper a bit. All right, now we go deeper to the weekly time frame. Now you could see something happening on the weekly time frame. All right, now something happened on the weekly time frame where there is a bullish momentum in the past 2 weeks. So this week, which is rounding up tomorrow, and last week ended up bullish, and it closed a bit above this level. I remember sometimes last week I was saying that if there is a candle that closed above these two candles, right, then we might be seeing a bullish momentum, more bullish momentum coming in on the Euro USD, right? Okay, now let's go deeper again, the daily time frame. Now it's becoming very obvious here. So you can see that this rectangle, all right, in which I used to map out support and resistance areas that price has been ranging in the monthly time frame and in the weekly time frame. You can see what you can see what is showing here in the daily time frame, telling us that there is a breakout candle out of this box. Look at this closely. A breakout candle. Can you see? A breakout candle. Now this breakout candle now is very, very significant, telling us that what? A bullish momentum is coming in at this level. Alright, and price is reversing. Alright, we don't know how long price will reverse, but this is an indication that price is reversing. So which means there has been a breakout candle, and as you can see, a bearish candle indicating that there is a retest of this level. You can see it. The price came to retest the level, and there is a push, a pressure back to the top, and we can see a green candle forming here. All right, now this is an indication that what? A bullish momentum would most likely set in at this price level. Okay, now let's look at it in the 4 hours time frame. Now you see clearly that on the 4 hours time frame, price had break out of this triangle totally. All right, and we can see price movement up, and obviously the retest. And what is happening here? Price is pushing up. All right, though it shows that there is a presence of a sell pressure from the top with these wicks, right? But from our pattern, from the pattern that the price has actually drawn and showed us, it's showing more of a bullish momentum than a bearish momentum. So if you go back to, let's go back to the daily time frame. So you can see it clearly here. There's a breakout already here, and there's a retest here. What do you think that an opportunity of the fourth candle is telling you after a breakout, right? It's telling you to position, for a buy. Okay, it's telling you to position for a buy, and that is what we are going to do. So let's look at it on the 1 hour time frame before we place our card. Now you can see that at the 1 hour time frame, each candle in the 1 hour time frame are created in the 1 hour, right? So each of these candles here are 1 hour, are candles created in the last 1 hour. All right, and we can see that from this box where there have been a resistance, there has finally been a breakout. All right, and the breakout was sustained up until this level before it started breaking down. All right, so what do we want to do here? So because on the 1 hour time frame now, we can see that there is a bearish momentum. It is more bearish than bullish on the 1 hour time frame than on the daily time frame, right? On daily time frame, for a swing trader, right, you want to go bullish, okay? But for a retail trader who trades, who trades intraday, for an intraday trader, they can then take advantage of, just what is it called? Just shorting the market for a short while, all right, and later buying, or waiting for the market to create a reverse and close above this and then buy. All right. Now, because of this 1 hour time frame, we won't be taking this trade immediately. All right, so we'll wait for it to actually close above this level. All right, wait for it to actually close above this level. Once it closes above that level, then it is a confirmed bullish market. All right, now let's look at the USD Chf. Okay, I think we have a setup there that has not been triggered. All right, let me clean up this chart. Okay, good. Good. Okay. Excellent. Now, when we open this chart and we go on the monthly time frame, now you can see that on the monthly time frame there is a different ball game. But the first question I say you should ask yourself is, what is the market structure? Obviously here we can see that the market structure here is a downtrend. Alright. Now, but when you look closely, you discover that the last candle to the current candle is very, very bullish. Very, very bullish. And why is it very, very bullish? That this was last month. All right, we are in the month of May. Okay, the last days in May, which tells us that April was bullish. All right, April was very bullish. Right, towards the end of April was very bullish. However, you expect that the market will retest. So let's draw out support and resistance levels. Let's draw out support and resistance levels. Good. So we can see support and resistance levels here, right? Let's now go to the lower time frame, which is the weekly time frame. Good. Now, on the weekly time frame, we can see an interesting story being told here on the chart. Now, and what interesting story is that? First, let's identify our support and resistance within these levels. All right. Okay. Good. Now, you can see that at this level here, this point, there is a shape that looks like a triangle shape. All right. Now I will tell you what that shape is and why it is important. Why it is important to look out for chart patterns like this. A chart pattern I'm going to draw out for you now. Okay. I'm going to draw it out. Draw it out. Yeah. Okay. Okay. Can you see this? Good. Okay, good. So obviously we can see what this is representing here now. right? So we can see that there is a triangle here being formed. All right, this triangle shows that what price was creating a higher high, a higher high. So let me, for more clarity's sake, I would really want to make it very obvious for you to know and see. Look at this. All right, that's an higher high. Okay. Okay, this is another higher high. Okay. Okay. This. Good. Good. Now, so you could see now that prices were on the rise, right? What moving in a triangular shape upward. So this is what we call ascending triangle. Ascending triangle. We will see that the triangle is ascending. Is ascending. Alright? Now, by this ascending triangle, it is a bullish chart pattern. Alright? It is a bullish chart pattern. So when you see such a chart pattern where price is moving in a triangular shape, right, but in a shape where it is rising consistently, creating an higher high, an higher high, an higher high, okay, then you know that the chart pattern is a bullish signal. Okay, now, and that is what we saw play out here. Now, and because that played out here, it's obvious for us to see the results. Look at what happened here. A breakout. A breakout happened here. Okay? A breakout happened here and price rose. The interesting thing is that as price rose, okay, a pullback is expected. In one of my sessions, I said, and I'm repeating, right? In one of my sessions, I said, and I'm repeating, that when there is a breakout like that, there are 80% chances that there will be a pullback. There are 80% chances that there will be a pullback. And this is what has actually played out here, where price broke out of this region, all right, and currently pulling back. All right, currently pulling back. Now, this pullback is a good entry point. This pullback is a good entry point. All right, so pullbacks are actually a good entry strategy. When price has broken out of a resistance level and pumped up, all right, then professional traders would wait for a pullback, because at that pullback you are buying the price at a discounted value. You are buying the price lesser than how it had gone so fast. All right, and that gives you an advantage to recouple some profits, all right, while riding ahead on the wings of the pullback. When the pullback gets to turn around again and start going, then you are able to ride on that bullish momentum again, which is what we are going to do at this level. All right, at this level. So before we enter the trade, let's look out for what the daily time frame says. Now, what is the daily time frame saying? So you can see here that the daily time frame is telling us that price is creating a choppy movement here. All right, let me bring in another triangle so you can see. price is creating a choppy movement here. Alright? Good. Price is creating a choppy movement here. And because price is creating a choppy movement here, it's becoming obvious that what? There is a resistance being formed at this level. Alright, you will see it in the lower time frames. They will tell the story better. But because obviously on this higher time frame, on daily time frame, you can see that these candles are having some wicks to the upside. Alright, which is an indication of a rejection sign. Alright, a rejection pattern. Now, let's go to lower time frame. Let's say the 4 hours. Good. So you can see what I'm saying. Alright? You can see what I'm saying here? The choppy market that I'm talking about. Come. Can you see this? Now this is the choppy market I'm talking about. So this choppy market is a good entry point for us. Alright? It's a good entry point for us. There are two things we can do at this level. We can either enter the market immediately now or set a buy order at the top here. Alright? We can either set a buy order at the top here, or we buy immediately at the current market price. Those are the two things we can do at this level. Alright? So let me know what we should do now. Should we buy at this level or wait for price to get to this green line before we buy? Let me know in the comment section. Let me know in the comment section. Are we buying immediately, or we are going to wait for price to rise? Alright, let me know in the comment section. Are we buying immediately, or we are waiting for price to rise? Are we buying immediately, or we are waiting for price to rise? Are we buying immediately, or we are waiting for price to rise? Let me know in the comment section. Is it that we should buy immediately, or we should wait for price to get to this green line? Okay, I'm saying wait for price to get to the green line. Wait for price to get to the green line. Someone said we wait. Good. Oh, someone is saying buy immediately. Another person is saying we wait. Okay. Good. Like so, we wait. Alright? We wait. We can either buy immediately or wait. Alright? But for us now, it is healthy to actually wait. Okay? Now the thing is this, there are some times, even for professional traders and beginner traders, it happens across board. So you begin to feel that if you don't enter immediately, it's more like you are leaving some money on the table. While at some point you might be leaving some money on the table, it's also important that you are putting yourself, at a level where you are not losing more than you can bear. Alright, so we would have to wait. We would set our buy order at 0.96408. Alright, let's do that. Our buy stop. Alright, we start our buy stop here. Good. So we have set our buy stop here at the green line. Okay. Now let's set stop loss and take profit. So don't forget, I said you have to determine your stop loss and your take profit even before opening the trade. Alright, do take note. Now let's use this place as our stop loss. So if price comes down, breaks out of this place and come to this place, then it should stop us out of the market. But if price goes up and touch this place, then we are in profit. You should lock up our profit and exit the market. So let's set stop loss and take profit now. So stop loss is 0.94508 and the next one is 1.00307. Okay, then we go. Good. So if the market goes against us, we would be losing 20 USD. But if the market goes in our favor, we would be making 38.8 USD. Alright, let's move it a bit so it becomes 40 and we alright, so good. Alright, good. Okay, coming. Yeah. Okay. Yeah. Okay. Cool. Okay, good. So we can see here on our dashboard here that our stop loss is 0.94643. Our take profit is 1.00458, right? And that's when our buy order is triggered. So if the price goes out of this box, all right, then our buy order will be triggered if it's going to the upside. But our buy order will not be triggered if it's going to the downside. So we make no profit, we will make no loss. Alright, our order will just be there. Okay, good. Yes, so now let me take questions with regards to the market analysis and the live trades we have been taking. So I open the floor for questions now. If you have any questions, do also ask. I look into them and we get to grow our knowledge. Alright, so I'm waiting. If you have a question, do well to ask. Question which relations to live trading or what we are doing. Any question? Yeah. No. So like I said, we could actually buy immediately. Alright. However, if we buy immediately and price goes against us, we would be in loss immediately. But if we are patient and price goes up and triggers our buy position and keeps going up, we are better off. All right, we are better off in risk management, buying at a future price, okay, than buying immediately when there is a more probability that price might break down further. Right, so that's just it. So it's a matter of risk management more than just let's make some money. All right. What does stick? If I get you, what stick is that? But if I get you, probably you're talking about the wicks below the candles, right? Now they are called wicks because they are more like an indication that shows that price has gotten to a particular level before, but was resisted, was pushed back, right? it is called weak, right? This is a weak. Let me look out for another example that might be more clear this time. Okay, good. This is a weak. Good. This is a weak. Right? This is a weak. So this weak only shows that it's more like a shadow, right? It's a shadow that shows that price is, has come to this level. Let me say a footprint. So which means this bearish candle now opens above and tries to close below. So the candle had opened above, come down to this low, but was pressured back, rejected, and came up here and closed. Now this is called wicks, right? An indication of rejection. This rejection can be a rejection from the upside or a rejection from the downside. All right. When you see a bearish candle, it's always a rejection from the downside, right? Sorry, from either side though, from either side. But there's always more rejection from the upside, right? For green candles, there's more rejection from the downside. Okay, so there can be rejection from either of the candles, but that weak signifies rejection, right? Price pressure, price, where price had opened, where price had gone to and come back to close. So you can see here, price opened here, came to this level, or was pushed back to this level and closed at this level. All right. The pair is USD Chf. Now, how do you see entry points? You see entry points when you are able to understand the support and resistance level. So you can see here now that we set our buy stop at the next resistance level, right? Which is more like a minor resistance level, a smaller resistance level, not like a major resistance level on the higher time frames like daily, weekly, but this is like a minor resistance level on the 4 hours chart, on the daily chart, on the 1 hour chart. All right. Now, the green candle means that the market is bullish, right? It's going up, bullish. The red candle means that the market is going down, bearish. All right, that's what it means. Now, this choppy market, right, might turn bearish. So it's about probability. All right. There's the probability that this market goes bullish or bearish. All right. Now, you reducing your chances of being at risk is managing your risk by understanding that, okay, this market is in a choppy market. It can either go down and it can either go up. So the best way to trade a choppy market is to set orders, to use limit orders, either buy order or sell order, depending on what direction of the market the price is going. All right. So for stop loss now, what stop loss means is stop loss is an order, right, that you, the trader, gives to your broker, instructing your broker to stop you out of a losing market. All right. So when you take a trade and the trade is going against you and you are losing money, when you set a stop loss, it takes you out of the market, which means it prevents you from losing further money than you can bear. And that is why you should always set your stop loss in line with your risk appetite. So the best time to trade, there is no absolute best time to trade. However, there are times that it's suitable to trade because there is more liquidity in the market. When you are trading in the London time and also in the US time, right? So for folks in Nigeria, the London time might be 9 a.m. and the US time opens by 3 p.m. in the afternoon. So these are good times, to actually trade. So for those outside Nigeria, you might want to look out for times where the London market opens equivalent to your own time zone, and when the US market opens in equivalent to your own time zone. It is at those periods that there used to be high volatility in the market. Now, bullish means market is going up, people are buying, right? Price is moving upward. So look at this movement here now. This movement here is bullish, right? Because price is consistently going up, right? But look at this movement here. This movement here is bearish because price is consistently going down. So how do you determine stop loss and take profit? Like I said, and I used to say, your stop loss and take profit can be discretionary, which means you can just think of a place that you feel it will be okay for you to put your stop loss and your take profit. Another thing is this: your stop loss you can use support and resistance to measure the areas where you want to put your stop loss. So you look at this now, we are putting our take profit as at the next resistance level, and our stop loss at the closest support level. That's why our stop loss is here, and that's how our take profit is here. The nearest closest support level and the nearest take profit level, all right, which can be anywhere, right? Also, you can use pips as a mechanism to setting your stop loss and take profit. So you can say, okay, for every of your trade, you set your stop loss 100 pips away from your entry level, and your take profit 200 pips away from your entry level. I hope that helps. Yes, so I believe that we have all gotten value from today's session, and this session would always be on the YouTube. So don't feel you have lose out from the values that we've shared here. If you want to watch it again, you can always come back to watch it, and I would always encourage you to come back to watch it because you will get immense value, right, from these videos. Don't forget to also follow Octa FX, sign up on the YouTube page, click the subscribe button, click the alarm bell, be the first person to get notified when we are having our great live sessions. All right, thank you very much for today. See you next session.